stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and this week I'm joined by Zacks' very own Mark Zinski, who is the Microcap stock analyst here at Zacks, and he's back to join us again to talk about some more small caps or microcap stocks and which ones are looking interesting here in March of 2025. He's been on the show before to cover some AI small cap stocks that you probably never heard of. I recommend going to check out those podcasts. You can find them on YouTube. Just go to zacks.com/YouTube to get our channel there and check those out. But today there's no AI. I know you're surprised, but there are other small cap stocks that are attractive right now. And given everything that's going on out there in the economy with possibilities of tariffs and economic slowdown and who knows what else may await us, he's brought a couple more defensive type plays today. So welcome back to the podcast, Mark.
Hi, Tracy. Yeah, I figured, that would be a good topic of discussion, trying to find a couple of defensive names. It is kind of like a minefield out there right now with the tariffs, the interconnectedness of the economy that's impacted by these tariffs, as well as, some pressure on consumer discretionary spending as well. And in a general, I think it's fair to say, decrease in, business confidence, right? So I think such times call for more deliberate and careful stock selection. So that was our thinking going into today's program.
Yeah, but where does that actually fit in with smaller caps? Because small caps are supposed to be, a little more vulnerable to economic pullbacks and things like that. And maybe I wouldn't want to be in them during, upheaval times. So how difficult is it for you to find something that's defensive in the small cap area?
There's no question. It's a pruning process for sure. I know you're a big fan of Warren Buffett, and, one of the things he often talks about is, the companies he invests in, he's looking for macro immunity, are these companies still going to, prosper no matter what the macro conditions are? So you kind of have to put that type of thinking cap on. You're right. Again, we don't want to generalize too much, but small caps for sure, I think, do have a little bit of a stigma of being a little more sensitive to macro conditions, especially interest rates. I think, that's definitely been demonstrated, that correlation over the years. That being said, with some careful, thinking, I think you can find some names.
Now, do you agree with the general sentiment about small caps that they are a good place to go to hide out if you want domestic focused companies? Because that's always been kind of the thing that I've always heard about the small caps is that they're small, they're only in America. They're not really doing anything outside of the country. So in an environment where you do have these possibilities of tariffs, maybe that's a good thing that I do want to find some small caps.
For sure, yeah. There's no question they tend to, have their manufacturing here domestically. So they're not going to have, the kind of convoluted, tax jurisdictions that a large, multinational is going to have, with such a global presence. So for sure, they are, they definitely, have that reputation of having a more domestic focus. And also in terms of tax policy too, they tend to have a higher tax burden, right? Because they can't decrease that tax burden through these international jurisdictions. So any kind of change in U.S. tax policy usually benefits them disproportionately as well. So that's something to keep an eye out for.
Okay. So something like the extension of the 2017 tax cuts where the corporate tax rate was cut down to 21%, that is a big benefit for the small.
That was huge. Yep.
Yeah. Okay. That's something to watch. That expires, but I'm not sure the corporate side expires, but the act expires at the end of 2025, but they're trying to extend it now. So we'll keep an eye on that as the year goes on, see how that might affect on the corporate tax side. Okay, so we're not doing AI. I did, just for those who are listening or watching, I got these stocks in advance. You and I always kind of talk about what we're going to talk about on this episode. And then neither one of the stocks has a Zacks rank. Let's just start off there. So neither one has the rank, but we know when we have Mark on, he tends to go off and he's not as dependent on the rank. A lot of small cap companies don't have a Zacks rank because you have to have at least one analyst, a street analyst, covering that. And there's only so many analysts to go around. They tend to cover the Mag 7 and the big caps and not as much on the small cap side. So not surprising, a lot of the companies that Mark covers are not covered by the rank, although we have had at least one, right, that was covered on one of our other podcasts. So again, go watch those. But so we can't just look at the rank here. And that's why I bring Mark on, because he's the small cap analyst and he is more involved with these small cap companies that he shares with us. And in terms of even talking with management, and he knows more about what's going on in the business than what we can just distill from looking on Zacks.com. Even if it had a Zacks rank, we still wouldn't have, much information compared to what Mark has. So he brought these two stocks for this week, and these are much more defensive plays, non-AI plays. Neither one has the rank, as I mentioned. And one I discovered when I went on to click the tickers, one of them is trading under $1. And if you listen to my other podcasts, I just did a podcast on tips for new stock investors. And my number one tip on that episode was don't buy stocks trading at or under $1. So we're going to just discount what I said there. But those were for new investors. And he did bring one here today. And so we're going to go a little bit more into detail with what's going on with both of these companies and why he likes them. But I just wanted to put that out there. Yes, one of them is trading under $1. Do we want to start with that one, Mark?
Sure.
Okay, yep. So that stock is Elite Pharmaceuticals, right? Was the one?
Yes. Mm-hmm.
Yes, Elite Pharmaceuticals, ticker E as in Edward, L as in Larry, T as in Tom, P as in Paul. And I did some research before this episode, and I went, of course, to their investor relations page. Everybody's got a website now, and they said that they are a specialty pharma developing oral controlled release niche generic drug products. And then it said they have a pipeline of opioid abuse deterrent products. They have a market cap of about 500 million. They have about 64 employees I could figure out. So they're pretty small. They're headquartered in New Jersey, and they have a research and manufacturing facility in Northvale, New Jersey. So Mark, other than this just cursory look at what they do, what do they really do?
Well, as we know, a lot of drugs, right, branded drugs are coming off label. And so the generics market is kind of the Wild West. You may think, well, then that's kind of a commoditized business. But These guys purposely focus on these controlled release drug products because they think that it's a specialization that has some higher barriers to entry. It's more difficult to manufacture these types of drugs. Additionally, they're focused a lot on the central nervous system. And importantly, they have 10% market share in the Adderall generic drug market. So as we know, Adderall treats attention deficit disorder. And they have a new generic that will replace the other branded big drug for ADHD is a drug called Vyvanse. And so that has now opened up to generics as well. And they just launched their generic version of that in Q1 of 2025. So the bet here, again, they have the 10% market share of the Adderall. The bet here is that they can duplicate that market share with Vyvanse. And given that they have a history of successful market penetration, they have a pretty robust manufacturing capacity in place. They just increased their packaging capacity. They have the capital resources, obviously. So I think that essentially this race has begun for Vyvanse, the generic, that they're well suited to gain market share and I think rather quickly to ramp it up. And in Q4, their revenue was down about 8% year over year because they had several orders that got pushed into the new year. But they did comment on Q1, and Q1 is looking extremely strong. They even publicly disclosed that in January they did about 12.5 million in sales. Now, I'm not saying they're going to do that in February and March as well, but I think it's safe to say the March quarter is looking very strong. And if you look at the inventory build that they had at the end of Q4, it suggests that they were clearly anticipating some fairly robust, product sales beginning in 2025. Now, Vyvanse is not as big of a market as Adderall. Obviously, Adderall is huge. It's several times bigger. I think Adderall is the industry estimates I saw have it at about I think 12 billion plus type market. Vyvanse is about a 4.3 billion market, but still, that's still a huge market. And if they can get out of the gates quickly and capture market share, it can definitely materially add to top line. So over the last 5 years, right, top line has grown at a CAGR of 30% plus. And so this combination of increasing market share with existing products and adding on new products, in my opinion, is a good formula for them continuing that kind of robust top line growth going forward. Now, I forwarded you that interesting article from The Economist. They recently did a piece on the ADHD market, which is pretty fascinating. In the U.S., the prescriptions, we can debate whether clearly there's some suggestion that it's overdiagnosed in the United States. On order of 2 to 3 times the magnitude you see in other Western countries.
Wow.
And part of it, and again, part of it has to do with our healthcare system, the way it's set up, right? You go in, you meet a doctor for 10 or 15 minutes, he prescribes, an ADHD, drug, et cetera, and the health insurance coverage and all that. It's arguably less of a robust analysis process in diagnosing it here in the States than it is in other places. But that's not, the thesis on this stock is not that, ADHD is overdiagnosed in the United States. It's just because obviously ADHD drugs have proven very effective, and they're finding more as they, explore the neurodivergent spectrum that, that component definitely is a part of the Venn diagram of some other, mental illnesses. So, I just think that it's a strong, stable, end use market. So,
does Elite sell any of these generics like overseas or anywhere else outside of the United States? Have they gone like to the European regulators to try to get it?
I think they just recently, or they're very close to getting approval in Israel, is my understanding. But right now it's predominantly the U.S. Yes, so they sell to the major distributors, and so they've changed their business model a little bit. So they've done, instead of a licensing model, they've shifted to more of this direct sales model where they're selling to the big drug distributors, and consequently, that's helping their gross margin, and it's really stabilized their gross margin.
Okay, is there usually has been my experience with these smaller drug companies that they're very heavily focused, obviously, on getting the drugs to market and getting it going, and making earnings or positive earnings or anything like that is a secondary issue for many years, usually, like into the process. But is there any talk of trying to get earnings down the line here, or no?
No, I think that they're not, they're not burning much cash, and but it is, in terms of valuation, I think, a sales multiple is the appropriate valuation tool to use in this case, because, like I said, you have that sales CAGR of 30% plus over the last 5 years, and there's no need for them. And they've explicitly said this, there's no need for them to raise any capital. They think, they're fine with their current financing, so there's no risk of that. And importantly, we were making fun of the stock price. And they talked about this on the call. They've been extremely conservative in preparing to do the reverse stock split, right? To get the stock trading above $1 in order to qualify for NASDAQ. This company was pretty much left for dead several years ago. So it's been a long road back, and I think they're very conscientious of that, and they didn't want to relist right away and risk the possibility of having to delist again. But now in their last earnings call, they said, definitively, they're very seriously exploring doing the reverse split and getting the uplist to NASDAQ. Now, some investors may say to themselves, especially any institutional investors on the call that might be prohibited from investing over the counter, may say, well, I'll just wait for the uplisting to NASDAQ. And that's a fair strategy too. But that will certainly help, create more awareness for the stock as well.
For sure. Okay, so that's Elite Pharmaceuticals, ticker ELTP. And we are going to show some charts for this one and this next stock that's coming up, but I kind of wanted to show them at the same time. So we need to discuss the second company you brought here today, and it's Frequency Electronics, ticker F as in Frank, E as in Edward, I, M as in Mary, FEIM. And they have a market cap of just 161 million. They had, from what I could gather, revenue of 65 million last year. And on their website, they said they're the world's leader in design, development, and manufacture of high precision timing, frequency control, and synchronization products for satellite and terrestrial applications. So completely different from Elite. And their product is used in satellites, missiles, piloted aircraft, GPS, secure radios, and a couple of other things that I didn't list. On March 20th of 2025, they just announced a contract increase for $12 million. I saw that when I was on their site. So what's going on with Frequency Electronics? Why do you like it here?
Well, so just in terms of a product standpoint, these guys are doing kind of that's the sophisticated physics-based type components for satellites and for on the military side for drones and for missiles, the guidance. So you're talking here like receivers, tuners, power converters, timing systems, oscillators, things of that nature. So this is a bet on, I think, two things, because basically a little over half of their business is sold into the satellite market. And then the other half is government non-space, meaning, defense spending. So this is a satellite and defense play, which I think these two sectors are relatively defensive in nature. On the satellite side, for instance, 31% of the global population still lacks internet access, right? And the satellites obviously help enable with the internet access. Goldman Sachs just put out a study, and they're forecasting that we're going to have 70,000 low Earth orbit satellites launched over the next 5 years. Now, granted, a large chunk of those, about 53,000, they think are going to be from China. Okay, but then, so that still leaves, a fair amount that are going to be non-China. And I've also seen some data that satellite manufacturing is slated at a CAGR of like 14.8% through 2034. Right now, the numbers I've seen say that we've got a little over 5,000 satellites in low Earth orbit. But you can think in terms of, right, the applications, the data that these satellites provide, not only for, the weather forecasting, right, has gotten so much better and precise, due to the information and data that satellites provide. So I just think it's in a fairly macro immune sector. We need this information, we need this data. Now we can debate about the whole thing, with the U.S. contracts with these satellite.
Right. That was going to be my next question. Well, I'm sitting there thinking, what about Doge? What if, are they at risk of having some of these? Well, I wouldn't think so, but
no.
But I don't know anymore, where who's going to get cut and where.
Right. There is arguably there's typically a lumpiness to these government contracts, right? They just announced, for instance, like you referenced, that large contract. So they can be lumpy for sure. And again, not to get into the politics of what, Elon is up to, but obviously he's got a vested interest with his company in its relationship with the government. So that'll be something to monitor as well. But obviously there are a lot of, non-U.S. satellite companies as well that are putting, satellites up into orbit.
Now, is most of their business U.S. focused then? U.S. Companies, yes. And then, okay. So U.S. defense contractors.
Yes. Well, that being said, they sell to, like Lockheed and Northrop Grumman and BAE Systems. So they're selling to the defense contractors. At this point, though, they're saying that, the majority of their products are ending up in U.S. systems. But that's not to say that they couldn't end up, they're not precluded from ending up in, allies systems. And so that's the second piece of this thesis is the defense spending. Because I just think in general with the current geopolitical climate, right, it just appears Europe is going to spend more on defense spending. Now, obviously, certain European countries have their own, they're never going to increase spending on defense, whatever, or they don't have the budget to do it, and it's very politically infeasible. But there are certainly enough countries in Europe, particularly the ones that, have proximity to Russia that I just got to believe are going to be increasing defense spending, unfortunately, And so, defense spending typically has been a sector with, macro immunity. And so I think that's...
Do they manufacture their own products, and are they manufacturing in the U.S. or?
Yes, yeah, they're actually very vertically integrated.
Okay, so we don't have as much of the tariff, but we may, depending on what they're using to make those products, steel, aluminum, any of that stuff, then they may still be impacted. I feel like it's nearly impossible if someone is a manufacturer of anything, it's almost impossible to make it 100% tariff proof, given what we know so far as of, March 25th about the tariffs so far. But it's almost impossible for, to completely tariff proof all of your inputs, at least not right now here in 2025.
Right. But I think, being that they are a supplier to the U.S. government, right, they inherently have to have their supply chains a little more, rigorously enforced, so to speak, right?
Right. So, you would think so, yeah.
Yeah. And so, and anyway, so this last quarter was a very good quarter. Revenue up 38% to 18.9 million. Their backlog, which is a big thing for these types of companies, was up 10% year over year. And they do expect, the majority of that backlog to convert to revenue over the next 12 months. And importantly, operating income went from a loss of half $500,000 in the prior year quarter to a positive 3.5 million. So, and that was because the gross margin, improved substantially. They're focusing on higher margin products. And they also got a little leverage on the SG&A line as well. So, given that backlog, and the satellite, and defense story, and the fact they're getting leverage, I feel comfortable with this name for the foreseeable future. So that was the rationale for picking this name.
Yeah. This is not trading under $1. I think it's around $16 a share or thereabouts. But I did want to bring up a chart of both companies, just to kind of show people what is happening. And you can see the red line is ELTP, Elite Pharmaceuticals. Frequency Electronics is the blue. This chart kind of makes Frequency look like, it's not doing anything. This is a year-long chart, but it's still up 140% in a year. And then Elite, which is more heavily traded, obviously, is up 1,405% over the last year. But it is trading under $1, and people love to trade those ones. And so we'll see what happens to that. It is off the highs, though, so it's pulled back a bit off of those highs. I'm wondering if it's got
quarter. Yeah, like I said, with Elite had kind of what was perceived, to be a soft quarter, right? Because the revenue was down about 8% year over year. But as I mentioned, that they just had, with the holidays and everything, they had some shipments that were pushed into the new year, and they've have validated that Q1 looks like it's going to be very strong. So I think that bodes well as a buying opportunity.
Okay. And I'm putting up the 1 month chart here for those who are, wondering how have these two, very small cap companies handled the recent stock market correction. And you can see that frequency is up 9.4% during the last month, and Elite is down 3.8%. So it doesn't look quite as crazy over just the last month, but this is what I would expect given the overall market correction.
Right. Another point is they have comparatively lower betas. I don't know if you can pull up the betas on there, but I think if I recall, the betas were like about in the 0.3 or 0.4 range.
Let's see.
They are less correlated, with the S&P. So
the frequency is at 0.4 as a beta, and Elite is at 0.1.
Oh, nice. Okay. Yeah.
And why don't you explain to people who are listening, why do we care about what the beta is?
Well, if we think, again, beta it's a measure of correlation, right, between the individual stock performance and the overall market. Some people like to bet on the market as a whole. And so if that's your strategy, then you would, be more inclined to look for companies that have a higher beta, have a high correlation or direct relationship with, say, the S&P, 500.
So what would that look like on a beta number?
Oh, that would be, so one would be 1.0 is a direct correlation. Is a direct correlation, right? So anything above 1, I mean, like a 2 or above 2 would suggest it's very highly correlated. So if the S&P goes up 5%, your stock in theory would, probably go up 10%, right? So by having lower beta stocks, we're saying that that would be a strategy for someone who thinks that the overall market's going to be kind of choppy and volatile, based on the current macro conditions, et cetera. And so they want to have some names that aren't as directly related to the performance of the overall market. Yeah,
so they're not moving in the same direction.
Correct.
So that would make sense.
So, yeah, I mean, if you think the S&P is, going to be choppy here for a while because of tariffs and what's going on with interest rates and, all these other things, then, then I think these names, could interest you.
Yeah. Yeah, there's a lot of people looking right now for plays outside of the same old Mag 7, S&P 500. And, if those are going to be treading water or have corrections, I want to be in something else that maybe I can try to avoid some of that, perhaps. So, yeah, they're always looking.
And these names don't have that consumer discretionary exposure, right? These are a generic drug company. I mean, you're going to buy your drugs no matter what, unfortunately.
Right.
And then like defense and then satellites, we're arguing have more of a strategic focus to them, and aren't going to, be as susceptible to the whims of the consumer.
Yeah. So, I think that's going to be important this year.
Yeah. Yes.
Yeah.
Yeah.
Okay. So these are some interesting names. It's always a fun time whenever you're on the podcast, Mark. And I know we'll have you on again as the year goes on, several times, I'm sure. And we'll be checking out some more small caps soon. But let me just recap the two that we talked about again on this episode. Elite Pharmaceuticals, ticker ELTP, and Frequency Electronics, ticker F as in Frank, EIM as in Mary, FEIM. And as always, you want to be sure to subscribe so you're getting all of our podcasts here at Zacks, and especially the Market Edge, because again, Mark will be back on with some more small cap stocks, and I'm bringing you stocks every week. So get us on Apple, get us on Spotify, get us on Amazon Music, just about any podcast platform. And if you want to see the video podcast so you can look at our faces and see the charts, you can do that on YouTube. Go over there, subscribe. I know many of you have. Like our podcast so that more people can discover us. And we will see you again next week with some more stocks.